Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, with me Cheryl D'Souza, and for now the market is seeing a deep red. In fact, we are threatening to go below the mark of 22,500 at the lowest point of the trading session for now, and pretty much for all practical purposes we are at 22,500. Nifty Bank is the key outperformer today. At one point of time that index was higher by over a percent. It's petered off but still holding on to gains around 0.6%. Both the private banks as well as PSU banks are performing today. In fact, if you look at ICICI Bank, HDFC, Axis, these are the ones which are managing to hold on to gains despite the weakness in the rest of the market. And the large caps that are offsetting the gains that we are seeing from the banks are the likes of Reliance. That's down about 1.5%. Infosys is coming under a lot of pressure, and you also have TCS, which is not doing anything for the bulls today. Even from the metals pack, which has been seeing a decent amount of shine off late, today that shine has completely gone off, all thanks to Tata Steel. The numbers weren't as bad, but clearly there is some profit booking which is visible there. So metals have seen quite a bit of knock, down about 2.5%. To add to that factor, the global markets aren't that excited, right? Overnight, the handover was quite weak, and if you look at the futures right now, in terms of the Dow as well as the S&P, they are pointing to a further weakness. European markets are also on the back foot, and all of that tells you, Cheryl, that there's just that entire conundrum which is coming in together, and the result is that Nifty is now below 22,500.
Absolutely, Anisha, and quite a bleak picture coming in for the markets. Like you mentioned, 22,500 is what we have actually fallen below at this point in time. Take a look at what the Nifty graph is also looking like, or the advanced decline ratio, very much tilted in the favor of the declines as we speak. And in fact, we only have 5 stocks on the Nifty index that are in the positive territory, and all the 5 names are from the banking space, as ICICI Bank, Axis Bank, SBI, HDFC, as well as Kotak Mahindra Bank, that are actually seeing an up move in otherwise a weak market. So let's bring on board our guest for today. We have Sandeep Sabharwal, who's joining us, along with Kunal Bothra as well as Aditya Arora. A very good afternoon to all three of you. And the picture right now is pretty telling on the screen, isn't it, Kunal? If you look at the movers in trade today, is that indicative of the signs that are yet to come? There's the private banks that will now lead the markets going ahead.
I think it's too early to say that, because right now the markets are still going on to an expiry mode as well as an event kind of a mode, so preparing for the event. And I think in that anticipation, I'm pretty certain that the markets would probably want to go in light as much as possible in terms of the positioning specifically to the events. And the pockets like private sector banking names, this was a pocket which was earlier over the last 2-3 expiries going into deep swelling in terms of short positions. Now that one of the reasons why these stocks are outperforming is maybe because of some reduction of short positions over here. And same is the case with the performing sectors, the performing stocks like the PSU basket as such overall, which had done exceptionally well. You're seeing some bit of long unwinding of profit booking happening over there. So I believe that net it's a juggling of positions and coinciding with the expiry as well as with the event, which is keeping the indices as well as the market in this kind of shape. Now 22,700 was the critical short-term support which we highlighted a couple of days back. That's decisively broken, and we are now threatening to go below the 22,500 mark as well for the Nifty. And I think on that sense, we could be looking at maybe some bit of nervousness coming back into the indices. The concern for the markets, I think, so far in the last 4-5 days is what's happening across the globe, because many of the global markets, the US as well as the European markets, they've started to recede by a margin of 4 to 5%. I think that's going to be some important pressure to watch out for.
Yeah, for now, the pre-market rates in the US are suggesting further downticks. The Dow futures are down a solid 300 points right now, even though the European markets are just about that flat line and a bit of a green there. But the Asian markets definitely ended in the red. So Kospi was down 1.5%, Nikkei was down, Hang Seng down almost 1.3%. So all of that clearly playing a part. But Sandeep, would you utilize this dip to buy already, or would you wait for the verdict to be out?
In my view, this fall has nothing to do with the elections. Like you yourself said in the previous sentence, you counted out the market and how much they have fallen. And Nifty has fallen almost exactly as that much. So we are part of the global ecosystem. We cannot escape that. So if we were part of the global up move, and we are part of a global correction. So I think that's what people should read into it. On the overall, as a strategy, there should always be some cash on the sidelines to deploy whenever the opportunities come. But only because of the election potential election results, whether we should be holding cash, I don't think so. Well, my base case is that the same government will continue. So in case that doesn't happen, which I believe is a remote possibility, then I think post-election strategy has to be very different.
That's a logical argument, right, Sandeep? That the Indian markets are pretty much mirroring what's happening across the globe. But sentimentally speaking, there is an event which is at play and it does have an impact on the momentum. And more likely or not, the expectation is that there's going to be a comeback of the current government, which means that we might be poised for an up move post the election verdict is out. Then does it not make sense to already, kind of deploy money?
It again comes back to the question of whether we think that just because of an election verdict, which is in any case expected, do we start defying global market movements? I don't think that's going to happen. And to that extent, given the fact that most of the global markets moved to all-time highs only last week or 10 days back and are seeing a bout of correction, it's natural for India also to correct. So I think we've just had a 3-4% correction from the top. If it corrects another 3-4%, then on specific stocks, we could start seeing opportunities.
I'll quiz you more on those specific stocks that you would have in your buying list. But for now, yes, it's almost 600-700 points which have been shaved off of Nifty in a matter of 3 to 4 trading sessions. Today, of course, the expiry is also coming at play, and that's why we are seeing a bigger, sharper fall in the last few minutes itself, below the mark of 22,500 right now. But in terms of individual movers, Godfrey Phillips had just come out with its earnings and it looked like a good set optically. So that stock had seen a positive reaction post the earnings. Let's pull up that one on our intraday basis, how that's doing. You also have Electronic Marts India, which has managed to perk up. JB Chemicals is looking okay. In terms of the result reaction, Emami is higher by 15%, while Ahluwalia Contracts is down and Tata Steel as well is down. Just wanted to get a sense from you, Sandeep, if you've looked at the numbers and the commentary coming in from Emami, does that give you any further confidence on that rural recovery play that we have been discussing of late?
Yeah, so I think rural recovery is imminent, and many companies have also said that because cash flows in the rural areas initially improved because of the elections, and now there's an expectation of a normal monsoon. So I think the rural economic recovery story should be for real. And to that extent, there's no reason to doubt it, especially when inflation overall seems to be in control.
That's the take about the ones that are based on the rural play. And Kunal, yes, IMD today has informed that finally you have the rainfall set in over Kerala and also moved towards the northwest India. But what's your take coming in on these FMCG plays, which have actually seen a good run up post their Q4 earnings, I believe? What's your take coming in on that particular segment as a whole, and which is your top bet?
So on the FNO side, I think Britannia is something which is the best performing one. That stock has been doing pretty well. You have the likes of HUL, which was showing good strength over the last, I think 1 month or so. A recovery of almost 10% from its previous lows around 2200, 2150 odd mark. So I think that's also done reasonably well, coming in line of breaking past above its critical moving averages. Then you have the likes of Nestle, Dabur, Marico, etc., which are also going to a bit of a recovery for themselves, even though many of these stocks have still yet to give signs of confirmation of a breakout for themselves. So I would believe that it's a bit more fragmented for the FMCG stocks. Some of them have shown signs of a breakout like Britannia. Some of them are going into a recovery phase, the likes of Marico as well as HUL, etc. So I believe that it's a matter of choice over here. If someone is looking to just ride on to the trend and the stronger ones, I would believe buying Britannia, staying on to the stock could be a much more better proposition. And for someone who's looking out for a contra pick over here, then I believe the likes of HUL could also make good trading sense from current levels of 2300.
All right, so those are the stocks that Kunal is preferring. But let's talk about one stock that's soaring in trade from that pack, and that has to be Emami Limited. There you go, 13% up move coming in the counter. And one of the key reasons for that up move is the good solid set of numbers coming in. The brokerages are positive. In fact, you have an upgrade also that's come in for Emami. You have Goldman Sachs, which has a buy rating, Antique with a buy rating, Jefferies also a buy rating, and all of them have actually lauded the earnings coming in for the counter in the quarter gone by. And to talk more about what actually transpired in the quarter gone by was the way forward coming in for Emami Limited, we have Anuj Bansali, who's the CEO of Finance Strategy and Business Development and CFO of Emami, joining us on the show. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And firstly, congratulations on good set of numbers. The stock is actually, or rather, the investors are lauding celebrating the good earnings coming in for Emami. But let's talk about your numbers, talk about the exposure that you actually have in the rural segment. It's the highest exposure that you have amongst the peers. If you could tell us, how is the demand in the rural area in the quarter gone by? How is the growth in rural versus urban? And what's the outlook on that particular segment going forward?
Yeah, after a lull of many quarters, no, the rural has started picking up, and this way we have been able to witness in the last quarter of the last fiscal. And in fact, the rural has grown by over 5% for us, and coupled with the decline which was there in the general trade, this has also grown slightly. So overall, all channels growing, right from new age channels to the general trade, and also the rural has also picked up well. So we feel that there are very valid reasons for us to be very optimistic, and this has proved well. On the top of it, the summer has been so good, though winter was delayed and so had an impact somewhat. And the monsoons are also expected to be good going forward. And so we are very upbeat, and we believe a good growth has to come.
Mr. Bansali, but this time around, when I was reading through your numbers, it does seem like your ad spends as a percentage of sales has spiked quite materially, close to 20% versus 15% that we had seen usually. Is that going to be a new norm?
If you look at the for the full financial year, no, the numbers would be different. In fact, it was there in the last quarter. So when we saw that there is an opportunity, so we do not shy away by investing more when we feel that there is more opportunity to grow. But on an overall level, our media spends would remain in almost the same level as it was there for the last fiscal. It could be 1% here or there. And in terms of the margins also, we believe that we would remain in terms around that range of margins where we are in terms of the EBITDA margin as well.
Okay, and what about then volume? Because volume was way ahead of peers at 6%. Do you expect a further acceleration, or this time around, because of the extended winters as you talked about, you got an extra fillip, or the 6% is just going to accelerate from here on?
So broadly for the next FY25, we believe double-digit growth is doable, and we are eyeing for that. And most of it would be volume-led. Only the price-led growth would be around 2.5% to 3% max.
Right. Let's talk about the price hikes. Have you actually gone ahead and taken any price hikes? Will you be taking any price hikes in the coming or in the financial year FY25? And what sort of a margin outlook do you have?
So price hikes we are very judicious. In fact, we have not done it very aggressively, nor in the earlier periods as well. And so we work on because we offer the value for money kind of products, and we are dealing in the mass market. So we are very conscious of the consumer sentiments, and we do it very judiciously. We work on cost reductions, we work on cost optimizations of the materials, and that has also proved well for us. And our margins, gross margin in the last quarter has improved by 270 basis points, and the costs are still benign. We believe for the FY25, the costs would remain in the same region as where we were in the earlier. There could be a slight betterment, in fact, in terms of there could be a slight margin improvement in terms of gross margin. But broadly, it would remain at the same level for the full year.
I also wanted a sense with respect to the discretionary consumption, because whether it was Kesh King or the male grooming segment, that seems to be a bit muted, or at least that is something that I'm reading of some of the commentary as well. When do you expect a bit of a reversal in that?
Yeah, so these are more discretionary kind of products, and we feel that with the economy becoming upbeat and consumption more spending power increasing, this brands would do well. And apart from this, we are taking lot many initiatives on branding, on placement and promotions and so all taken together, we believe that these brands will have a strong ground to grow from here.
Right. Let's talk about your international business then, which actually accounts to approximately 18% of the revenue. Do correct me if I'm wrong on that particular front. Did see a constant currency growth of about 9% in the year gone by. What sort of an outlook do you have for FY25? Also, what are the key drivers for the international business that you foresee in this fiscal year?
So for the FY24, the constant currency growth has been 12%. And for the quarter, it was constant currency growth of 9%. So and this is despite challenges in the Southeast Asia and also in CIS countries and the volatility of forex. So this all taken together, despite this kind of a growth, we have been able to deliver. We believe we will be able to deliver the same kind of a growth, if not better, in the next FY25 as well.
Sorry, so that would be
led by, if you look at Cream 21 has done very well. So few of the brands has done extremely well for this international business. Cream 21, which was an acquired brand, has done very well and done an all-time high kind of a sales. Apart from this, 7 All-in-One in Bangladesh has fared very well. It is so many of the initiatives are being proven to be very good for our international business as well. And so we expect, and also apart from this, our strategic investments, which have done well in the past and has a lot of potential to do further growth to grow from here in the FY25.
You've said that you expect a similar growth, so you corrected me there. So it's 12% constant currency growth in FY24. So are you expecting it to be in the mid-teen range as well, or do you expect it to be better than that?
Very difficult to put a very precise number. As I said, we would remain in the double-digit region, and because see, you also do not know where the forex volatility would be. So despite this, I am saying because it has an impact overall on the international business.
About FY24 and we have talked about FY25 as a whole, but I wanted a color regarding the Q1 FY25 and I'm trying to gauge what kind of numbers we should expect because the summer has been very scorching and that unfortunately means bad news for us but good news for your products like Navratna and Dermicool. Tell me what kind of offtake that you have seen in the last couple of months and on account of that, is it going to be a much stronger Q1 than we normally see?
Would not be able to comment more on the quarter-on-quarter kind of numbers. But as I said, we would be on an overall on the fiscal, we would expect a double-digit kind of a growth. I would like to maintain it that.
So on that note, we let you go. Appreciate making time and speaking with us. So that's the management of Emami talking about a double-digit growth and the margins being maintained at the current level. But let's get back to our discussion that we were having with Sandeep Sabharwal as well. And Sandeep, I wanted your view regarding a couple of these specific names. Tata Steel and Cummins, both were good show in terms of earnings. For Cummins, you can make a case that the stock had run up, so it's seeing profit booking. But Tata Steel, what explains this 5 to 6% cut? Do you expect a reversal on that one?
The steel stocks had moved up sharply because of the fact that there was an expectation of a recovery in cycle, along with many of the other metals which we have seen. But steel prices have still been soft and even in this quarter, Tata Steel selling prices were down, I think 5% Q on Q. So cost savings on the raw material price are the things which have been saving these companies. And so to that extent, we had a very sharp rally. Now, fundamentally, the rally doesn't have very strong legs, I would say, on the commodity side. And to that extent, we are seeing this corrective move happening now.
Okay, point taken. So that's a view coming in on Tata Steel. Actually, if we can, let's play a soundbite because we did have an interaction with the management and this theory about, bottoming out of the domestic prices is something that we have been discussing. So if we can, let's listen to a small slice of that conversation and then we'll come back to you, Sandeep.
In the UK, you will see two tough quarters, which is Q1 and Q2. But in the end of Q1 in June, we plan to close the first blast furnace. And in September, we plan to close the second blast furnace. And after we do that, you will see UK also in the positive in the second half of the year. So this year is going to be a very crucial year. Turnaround in Netherlands. Last year was a loss. This year will be a profit, at least at an EBITDA level. And the UK second half we hope to move from a loss-making facility to at least a balanced facility.
Right, so that is the management of Tata Steel. We caught up with them right after their earnings. We got Sandeep Seth coming in on the steel counters. Let me take your take then, Aditya. Very good afternoon to you. And how does the entire metal pack actually look to you? It's been under pressure and quite a lot of pressure in trade today. And globally as well, you're getting some headlines talking about the pressure also building on most of these commodity names as well. But what's your take coming in on Indian metal stocks?
Very good afternoon to you and to everyone. Look, this is very obvious given that we have seen a decent correction in commodities recently. Today, if we look at the commodity market, then we are seeing correction across the board, whether we talk about copper, which is down about 5% in last 3 to 4 days. If you talk about zinc, that is also down, precious metals are down, and lead is down. So, when the underlying commodity corrects, these metal counters also correct in line with that. And we are also seeing good run up in DXY since last 2 days. So that is also acting against the rally of metal counters. And they had also become quite overextended and overbought. So this correction is on back of that. But accumulation for Nifty metal index would come after a cut of about 2 to 3%. Currently, it's trading at 9550. A good level to come again, become bullish on metal pack would be about at levels of 9250 to 9300. This is the level at which one should look at metal companies.
Point taken. So that's the view coming in on metal counters. But let me quickly take the closing trade ideas as well from our technical experts. Kunal, you go first.
So far, SBI is something which looks attractive, trading at 830 odd levels, and over the last few days, we've seen the stock being a lot more sideways to slight bullish for itself. So would go with SBI as a closing trade.
Okay, Aditya, what about you? Any closing trade ideas that you would want to pick out?
I like Adani Power. The stock is outperforming the peers and showing good relative strength. So Adani Power is a good buy at 699. Stop loss would be 670 and target would be 730 to 760.
All right, so that is about the closing trades coming in from my experts. But let's just take a note of the flash on the bottom of your screen. That's IDFC First Bank that is approved about 3,200 crore rupees preferential issue at the price of around 80.63 rupees per share. They are saying they are going to issue shares to LIC, HDFC Life, ICICI Lombard, SBI General, Aditya Birla Sun Life and Bajaj Allianz Life as well. So a couple of marquee names that the pref issue is going to be issued to. But let me come to you actually, Sandeep, and let's talk about the entire PSU space, or rather the space that has actually seen the maximum run up has to be the defense and the railway counters as well, along with power. In fact, I cannot even lose out the PSU banking names as well. But what's your outlook coming in for these pockets? Because they've actually seen a rapid rally over the last 1 year or so. Do you think that now that the pace of the rally will cool down?
And the pace of the rally should cool down simply because of the fact that the current prices of most of these stocks are reflecting a 30-40% continuous growth over the next 10 years. So it's very tough for any of the companies to achieve this. There could be a couple of years which could still see 20-30% kind of growth in many of these companies. But I think these kind of valuations which many of the PSU companies have reached, even in the defense names where the visibility is high and as such, the downsides might not be significant unless and until the market cracks so much. The upside also has become very limited because of valuations. And wherever to the entire uh, so all the railway stocks, all defense stocks moved up, but the stories in many of them are very different. And some companies have disappointed earnings. For example, IRCTC earning growth was just 2%. Overall, at a 13-14 rupee EPS, it still trades at 70 or 65-70 price earning ratio, which is unsustainable in my view.
Fair enough. You make a fair point on that. Let's see whether those companies manage to deliver the earnings or not to command the kind of valuation they are trading at. But thanks, Sandeep, for making time and speaking with us. The market for now is not seeing any buying on dips. People have been talking about that the nature of the market is buying on dips, but for now, there is no buyer which is imminent. We are at 22,450 right now. So, of course, there is that nervousness around election verdict. There is that entire pressure coming in from across the globe. And the fact that we are now at the fag end of earnings season, all of that is coming together, but a 250-point slide. Quickly, Kunal, in a single word, buy the dip or not?
Nothing.
Okay, so
No trade.
do nothing. That's been his motto since the start of the trading session. So don't get tempted even right now to buy it. Stay away. Aditya, you want to take a one-word call on it?
Like to say, do nothing, wait for a good risk to reward trade. That would be the best strategy right now.
For our business if people do nothing, but that's the honest opinion coming in from our technical experts that perhaps today is a day you can call it a day early, shut the laptops and perhaps just go home and do nothing. Time now to slip into a very short break. We are not calling it done yet. We are just taking a short break. We'll be right back in a couple of minutes.
Welcome back. You're watching our closing trades right here on ET now. Not a great picture coming in for the markets at the day's lowest point. We're actually threatening to break below that 22,400 mark. We're just 38 points off those levels. Let's take a look at the stocks that have actually fallen over the last 15 minutes. The maximum fall have come in this Adani Group counter names. So Adani Enterprises has fallen in excess of about 1% over the last 15 minutes. You have Adani Ports that's seen a downtick of about 1%. Cipla, Ambuja Cement, you have Biocon that's under pressure. So pharma is actually under pressure over the last 15 minutes. If you look at the charts for Cipla, Aurobindo Pharma, Lupin, Torrent Pharma, Divi's Lab, all of them have actually taken a knock over the last 15 minutes and a sizable knock coming in for a 15-minute chart. Even Bajaj Finance is under pressure. Tata Steel as well is under pressure in trade today. So yes, not a great picture coming in. 22,439 odd levels is where we are right now, Anisha.
Well, yes, let's see where the next half an hour takes us. Is it going to recover or is it going to go lower? But Sudeep Shah is also with us on the show. Sudeep, what's your verdict on the market mood right now? Is it headed lower? And if yes, what's the floor for the market, if any?
Good afternoon, Anisha. Absolutely. See, what we're seeing in the last couple of days is that that's complete down. Nifty is in a downtrend, and last 4 sessions we have seen Nifty having a higher top, lower top, lower bottom formation, and today it has convincingly broken its 20-day exponential moving average, which was at around 22,550, 22,560 mark. So I feel till the time this zone of 22,600 now does not cross, or Nifty is not able to sustain above this zone, Nifty is headed down, and the first support from the current levels would be around 22,250, 22,270 zone, the same zone from where there was a breakout on the 16th of May. So I feel that zone would now get retested. 22,250, 22,270 will now act as a strong support on the downside. And that is exactly the zone from where there is a rising trendline support zone also. So I guess all in all, 22,250, the most important level in my opinion.
Okay.
All right, so that's the take coming on the market. So let's bring on board Sudeep Shah as well. Sudeep, very good afternoon. So I beg your pardon. Sorry, Varun Sabu is also joining us on the show. Varun, let's talk about the markets. We did speak about what's happening a short while ago about metals, as well as we spoke about the banking names. But let's talk about the pharma names. Over the last 15 minutes, no doubt we've seen a fall in the pharma names. But off late, not many are actually talking about the large cap pharma space as a whole. What's your take coming on the large cap names in the pharma sector? Because we've seen a lot of the mid cap companies at least perform a tad bit better in the earnings, isn't it?
Hi, Idina. Thanks again for inviting us to your show. Yeah, obviously, so pharma had a very decent run, which we saw for the last few quarters that these stocks were doing very well. Uh, per se, the results and performance, I think most of them have delivered quite decent numbers. So I don't see a challenge in the way they have performed. It's just that it is about positioning, right? We are seeing across the market that positioning is coming off. So it's just that the event risk, which is keeping people a tad away from the markets right now. People are going lighter to see how it pans out. Honestly, today is the expiry day where probably you're seeing positions coming off. I see all this as a big opportunity where one should look to add names, be it pharma or any other sector.
Point taken. That's the view coming in on pharma. For now, the pre-market rates from the US hasn't really turned that much. It's still 300 points lower for the Dow, and the Nasdaq too is down 70 points. But for what it is worth, there's a bit of a bounce back in the Indian markets. So from that 22,430 thereabouts, we've made a bounce back of almost 40 to 50 points, and we are now climbing very close to 22,500. Let's pull up some of the banking names as well, because they have been the big outperformers today. At least they were holding on to the green even by a smidge. So there's a bit of a recovery on HDFC Bank. Other names like ICICI, SBI will also come up for you on the screen, and these are the names which are actually holding out. Varun, is that a better trade right now in your books? Because that's what everyone is thinking about as to the FII coming back. And today, of course, Goldman Sachs wrote that big note about how historically we have seen after the election verdict, FII flows do tend to catch up. And if it does happen, then clearly private banking names should be the beneficiaries.
Absolutely. You answered it. In scenario where we see continuity in the government, it's obvious that FIs will have to come back. They have been selling and they are feeling the brunt of it. So they have been major underperformers versus how domestic mutual funds or domestic funds overall have captured this entire rally. And the big miss out has been for FIs. So the only space which is left out where valuations are still comfortable is the banking space. And also one has to keep in mind where there are concerns again building around the yields in the US, etc. There will be some profit booking which you'll see in the tech pack and in the metals pack in the near term, which should help financials pack also overall. So it's just a shift that you keep seeing, which is happening. Honestly, I would be very positive across all sectors for now, particularly banks to lead the pack, IT and also metals going forward. Yeah.
All right, let me come to you then, Kunal. Let's talk about what exactly is happening, especially in the broader markets, because the carnage there is pretty steep when you compare it to the benchmark indices in trade today. Where do you see the broader markets actually headed? We've spoken a lot about Nifty Bank, but the broader markets in particular, do you think more pain in store for that particular segment?
A few days back when the large caps started to move up higher, I made this call that the mid caps and small caps would tend to underperform. Large caps would tend to outperform, and I think that's largely, I believe, that as an overall trend it's playing out, because the markets are now heading into an event, so it's going to be balancing out of positions, trying to ensure that most part of the risk is out of your portfolio, or at least some bit of balanced risk is only the one which remains as part of your portfolio. I think in that sense, mid caps and small caps are the first pocket where, and especially for the stocks and sectors which have been doing exceptionally well, that's where money would be churned out. And you look at the last 4-5 days of pattern, the PSU stocks, PSU banking names, metals, commodities, etc. The pockets which were doing exceptionally well, those are the pockets where you're seeing trimming of gains and positions happening. And I think that's a very balanced kind of a strategy from the markets. And on the other hand, what you're seeing, the underperforming names, for example, the FMCG stocks start to show signs of recovery. Pharma stocks, which have been doing pretty well, they have started to see one more leg of price up move. Private sector banking stocks had seen a good cover up of their underperformance. So I think it's more of balancing of risk which is playing out in the last 4 to 5 days. Once the event is out of play, I would believe, and if there is assuming status quo in terms of market expectations, then we may probably see the mid caps and small caps coming back again.
Yeah, but talking about some of those mid-caps pharma names, take a look at Markson's Pharma, 12% cut if I have it right on my screen. Alchem Labs is down 6%, has been trending lower since the start of the trading session. Cummins has piled on further losses now, 6% cut there. Hindustan Zinc has retraced completely. There's a 5 to 6% cut coming in there. And talking about the coming week, it's not just about election verdict. It's going to be a very, very heavy week, given the fact there's also RBI, MPC meet in the coming week. So the market clearly has a lot to watch out for. And ahead of that, it wouldn't be a bad strategy to go light. But talking about just tomorrow, we have the India GDP, which will be out tomorrow. So we are watching out for that. China manufacturing and non-manufacturing PMI is going to be out. And that does have an impact on the metal stocks back home and the commodity prices, and that's the reason we watch out for that closely. TCS AGM is tomorrow. Of course, there's a special dividend, etc. But the commentary coming in from the management would be fairly important. You also have Inox Wind and REC boards, which are likely to meet for a fundraising. Tomorrow will be very important in terms of the setup of the trade, because it will be the start of a fresh expiry. It will be the last day before markets react to exit poll. It will be the last day before the auto stocks react to the auto sales data. So I think, of course, today is a bit volatile, but tomorrow is going to be a very topsy-turvy ride. So just setting the context for that. But talking about the topsy-turvy ride, ahead of that, Sudeep, what kind of BTSC trade would you recommend for our viewers, if any? It could be STBT also if you want.
It's not an STBT since markets have already fallen this much. I do not want to take any open calls on the downside. But one stock which I like and which is from the large cap space is Bharti Airtel. Now, if you see here, this stock is even trending higher compared to its April highs. It's created a new monthly high. And secondly, if you see, while Nifty has been cracking 3.5% on the downside in the last 3 sessions, Bharti Airtel has gained 1%. So there is some sense of higher relative strength which is visible here. And looking at the daily, weekly, and the monthly charts, the structure is very strong here. So I feel from a positional perspective, from a medium-term trader as well as an investor standpoint, this stock looks good from the current levels. 1350 could act as a strong stop loss on the downside. And on the upside, I feel levels of 1415, 1425 could be visible.
Just since we're talking about Bharti Airtel, Sunil Bharti Mittal did speak with Economic Times paper today, and he's clearly articulating how ARPU has to move to that 300 rupee mark. The timing of hikes is what everybody has been waiting for, but the balance sheet will not be strong enough until and unless they go to the level of 300 rupees on the ARPU. They're 209 thereabouts in the quarter gone by. And I think that's one of the big talking points as to whether the tariff hike happens after the election verdict or not. That's pretty much factored in by the street, and if it doesn't happen, some of these stocks might correct. But talking about the BTSC trades right now, Kunal, what's on your list?
So I'll go with two buy calls. Exide Industries is something which I've been bullish on. Looks attractive at current levels of 498, 500. So would retrade a buy with a target of 530. Stop loss could be trailed to 490. And second would be one Industar. This could be an interesting play because the stock in the last 1 month had gone through a 7-8% correction from 365 to almost 335 levels, and then from 335 it's come back towards 340 plus mark, which means that this 335 odd mark could be considered as a decent short-term support. So keeping that as a stop loss, would look out for targets in the range of 360 for Industar.
So those are the BTSD ideas coming in from our experts, and yes, keeping an eye on the markets. We are once again sub 22,500, or we are actually lingering around those levels. But on that note, we slip into a break. When we come back, we will tell you the course of the market over the last 15 minutes of trading session.
Welcome back. Well, the Nifty has stabilized for what it's worth. So we are now around that 22,490 mark. But individual movers, Emami, for instance, it was higher by 14% throughout the trading session. We just spoke with the management around 20-30 minutes ago, and since then there's a further leg up in the stock now. It's 18% higher, so management clearly confident about that double-digit growth, talking about a bit of an acceleration as far as the volume growth is concerned, hopeful of a rural recovery, and the margins are expected to be around the current levels itself, despite moving around their ad spends as and when the opportunity arises. So clearly a lot of focus on top-line growth right now. But a lot of stocks are buzzing around on heavy volume. So let me take it across to Ansh to get a gist. Ansh, it's been fairly volatile at the index level on account of expiry. But what are the other big takeaways that you are looking at right now in terms of the price volume buzzers?
Right, so Bata India will be the first stock in focus, as the stock seems to have given a slight breakout from that reverse head and shoulder chart pattern, though the prices have actually come down. If it goes above that 1380, 1390 level again, then the stock could become good positive. Also, today's volume is more than 9 times its average volume of last 20 sessions. Apart from this, Sun TV will also be in focus, as the stock has actually given a breakout from its downward sloping resistance trend line, which was intact for 7 to 8 sessions, along with good volume as well. Lastly, Emami will be in focus, as the stock has actually given a breakout from its horizontal resistance zone which was intact from last 8 months. Also today's volume has shown a good spike of around 25 times its average volume of last 10 session, indicating very strong participation in today's move. In addition to that, the stock has also touched 2-year high level. Now apart from this breakout stocks, there are high chances of Pyramid Enterprises getting into banned list tomorrow for FNO. So keep an eye on these stocks.
Guys, what are the volume buzzers then? Let's take the discussion on the markets forward, and let's talk about the auto and auto ancillary space in particular. Actually, Varun, how is that particular segment of the market looking to you, especially the auto ancillary space? Because if you look at the returns, it's actually had good returns over the last 3 months or so. So, what's your take coming in on the auto ancillary space? How do you see it poised going ahead?
A complete derivative of auto companies. So we have to discuss about how auto OEMs are panning out. Now, if we see as per numbers, four-wheelers, despite the high base, running on a high base for last couple of years, we're still seeing demand to sustain there and volume still being on the positive side. So four-wheelers are continuing to do well. Two-wheelers are an absolute bull run of their own, right? So in terms of business, in terms of growth on the ground, etc., two-wheelers have been seeing extremely sharp demand. Adding on to this, we saw in terms of CVs, Ashok Leyland also coming and reporting well. And we saw that numbers for CVs also starting to pick up. Apart from that, if we see tractors, there's a lot of hope around the entire monsoon, etc., to be good and things to pan out well there. So if all these segments of the autos are doing well, I don't see any reason why auto ancillaries, despite the run, should see correction. I definitely see that these will remain strong. To the time you don't see weakness in the auto OEMs.
So expect auto ancillary stocks also to actually perform well, this given the fact that it expects the auto segment as a whole actually to perform well. But what's your take on that, Sudeep? Do you see these auto ancillary names in isolation, or do you also correlate to that when you talk about the technicals? What are the charts indicating? Are they moving in tandem with what the auto players are doing, or in isolation?
See, they're largely moving in tandem, and if you see a lot of stocks like say FIEM or a few other names in auto ancillaries, we have not seen deeper correction over there. So even in the last 15-20 days, whenever we've seen auto stocks moving well, the auto ancillaries have also followed suit. So I guess when the markets bounce back, these will be the first spaces along with defense and railway stocks. As well as the CPSE space, which will see a leg of an up move in the first place. So I am very bullish on auto as well as auto ancillaries. However, I'll just keep one thing which I would like to say, tell to all the viewers is that whenever you are buying now with respect to the budget or with respect to the entire auto space, buy it in a staggered manner rather than buying it in one go.
Staggered approach might be better than buying in one go. That's the view coming in. But as we are talking about, a lot of important events lined up, and tomorrow, of course, in the evening, we'll get the GDP data for Q4. Now, the RBI projected rate in the annual report that came was talking about a real GDP growth of around 7%. But if you just talk about Q4, the expectations are on the weaker side. It's a broad range that we have. Numbers are from 6.2% to 7% plus, because SBI Research, for instance, is expecting that the GDP in Q4 could be a real surprise at around 7.2, 7.3 thereabouts. But the rest of the consensus seems to be towards that 6.7, 6.6% mark. Because in the quarter gone by, there was a bit of a weakness when it comes to the manufacturing as well as the services sector. So both of them were fairly muted. There was muted contribution from the agri sector as well. And most of the economists believe that this is going to be one of those quarters wherein we'll see a weaker number, because if you look at the rest of the 3 quarters, we were doing a better than 7% growth, but this quarter might be muted. But just listening into the commentary that we've got off late and the commentary coming in from the RBI, there seems to be a bit of a risk in my mind that there could be a number which is potentially better than 6.7, but the consensus as of just a few days ago was around that 6.7% thereabouts, and that will have an impact in terms of the rate cut cycle going forward as well, and what happens to the RBI decisions. But for now, this is what we are expecting, a growth rate of around 6.7, 6.6% in Q4 FY24. But shifting focus away from GDP and individual sectors, let me talk about a few stocks. Then Emami, as I pointed out, is up 17%. Paytm is the other one, which is up around 5%. Would you have a view on this, Varun? Paytm, the stock has been doing quite well, and if not just Paytm, put in the pool the rest of the new age tech companies as well, the Zomatos and PB Fintechs of the world.
Active coverage in these names, but as regards the fintechs, etc., we are already seeing business absolutely rocking for them. We keep hearing about all of these new age technology businesses doing so well, be it Zomato, be it Blinkit, be it any one of them. And incrementally, we are not only seeing people using this in the metro areas, but we are also seeing the penetration to be pretty high for all of these and the acceptability being very high in tier 2, tier 3 towns as well. So our teams went across India. We just traveled about a month back. There were 11 teams which went to about 15 states. And we really covered and we got to understand that the acceptability of technology and these platforms is significantly high. So I don't, I mean, I really think that these are the companies of tomorrow. So they are doing well. So we are yet to have an active coverage. So I can't give any formal recommendation on it. But yes, on the ground, we are hearing pretty optimistic things about the usage around these names.
Right. Kunal, let me talk about one particular segment which was down and out for the last couple of months, but we've seen actually a good revival over the last 3 months at least, and that is the diagnostic space as a whole. What's your take coming in on some of them? If you look at Vijaya Diagnostics in the last 3 months, seen a spectacular run of about 28%. You've also had Metropolis also play a catch up along with Dr. Lal. What's your take coming in this diagnostic space? Do you think that the up move that they have registered is here to stay now?
I think there's a decent trend in the making for many of these names. Metropolis is something which I think on the chart looks specifically very attractive. It had a touch and go movement, I think, towards the 2000 mark, a few trading sessions back. But then it's come back again to that 1900 levels. But the near-term trend has been very bullish. The stock has consistently made a pattern of higher highs and higher lows. So I would probably expect that if once this retracement leg is over, the stock would probably make a dash back again about that 2000 levels and go for a fresh high, at least swing high for itself. Lalpath Labs, on the other hand, I think is also very interesting because the stock on the monthly charts is forming an inverted head and shoulder pattern. So 2700, 2750 is apparently the breakout or the neckline of this inverted head and shoulder pattern for Dr. Lalpath Labs. And I would sense that whenever the stock breaks past about this 2700, 2750 mark, we could be looking at least another 300 to 400 points upside on the stock pretty soon post that. So that's another name to look out for. Vijay Diagnostic, I think, had a rally about 800 mark yesterday or day before. I think the stock had moved to 830, 840 plus levels. Today again it's come back to the 800 mark. So net it's consolidating at the 800 levels, but again looks attractive because many of the most of the stocks from the space have been showing signs of consistent uptrend over the last few weeks.
Right, so those are the diagnostic space. Actually, let's talk about Apollo Hospitals. Let's be in the healthcare space as a whole. It's all set to report as Q4 earnings. Let me actually go across to my colleague Shrishti, who's here to tell us what the street is penciling in for the quarter gone by for Apollo Hospitals. Shrishti, over to you.
So a decent set is expected from Apollo Hospital this time around because on a sequential basis we are expecting just the flattish growth for the company, while on a YOY basis there could be a double-digit growth across the numbers. Why so a flattish growth we are expecting? Because on the occupancy level, the ARPOB numbers, we are not expecting a significant jump over there, and that could contribute to the numbers. So firstly, onto the revenue figure, we are expecting 4,907 crores in the top line. EBITDA is expected at 626 crores and the margins are also expected to be flat sequentially at 12.8%. And lastly, onto the profit figure, 253 crores is what we are expecting. Now looking at the factors at play, then the growth in the ARPOB as well as their healthcare operations could boost the earnings this time around. But other than that, the primary care and the diagnostics is also expected to support the earnings on the back of a better operational performance. If we talk about their hospital business, that is expected to show a growth of 13% on a YY basis, but the hospital margins are expected to be down about 20 basis points on a sequential basis. The occupancy is also expected to remain flat sequentially at 66% this time around, while their AHLL business is expected to report a 20% growth on a YOY basis. So not a great set expected from Apollo Hospitals, but apart from that, from the management commentary, we will be definitely watching out for the updates on the capacity expansions at the Pune, Hyderabad, as well as their Kolkata and Bengaluru facility, and how some of the newly added capacities are helping into the numbers. So all eyes on Apollo Hospitals.
Yeah, watching out for that, most likely post-market ask today. But in the meantime, Varun, before we let you go, talk to us about what's been the latest change in your recommendations post the earnings season. Any big upgrade, any big downgrade, anything which becomes a very high conviction buy?
Honestly, there is not a very big change that we are seeing. Trends have been more or less fine across sectors that we've been seeing. But yes, couple of sectors which I would strongly recommend that one should keep on radar. One is the banking space, as we discussed, considering if there is continuity, and which is a higher probability event, which we think. If there's continuity, banks should be the best space to be in. And the second one would be technology space, IT, which is seeing some correction right now, considering the fact that yields in the US have shot up and there's kind of a correlation where people go and sell IT companies and that. But one has to keep in mind that IT companies will come back very fast the moment you start seeing yields in the US again coming down, and which is an eventuality. It might not happen in a month or 2 months, but it's an eventuality. And these are great businesses available at good multiples. So excited in both the spaces because of the valuations over here. Yeah.
Alright, so that's the take coming in on the IT space, and as we wind down for trade today, we are actually seeing a good bounce back from the day's lowest level when it comes to the benchmark indices. We have bounced back from those levels. Now we are above 22,550 when it comes to the Nifty index. You have the Nifty Bank that has made sure that it has held its fort through the course of the day in the positive territory. 300 points uptick coming in for Nifty Bank in trade today. Broader markets, however, a sore point in trade today continues, will be ending the day with sharper cuts when you compare them to the benchmark indices. Take a look at the Nifty Metal Index. It is top sectoral loser in trade today as well, along with the IT sector, which is under pressure. You have, apart from banks, you have none of the sectors in the positive territory. Take a look at Marks and Spencer. That one is ending with the cuts in excess of about 14% on back of its earnings, or 12% now. Emami, on the other hand, has seen an uptick of about 18%. Good set of numbers coming in for this particular counter. Good commentary coming in from the management as well, aiding to that up move on the stock. Indigo is another space that another counter to watch out for, given the fact that it had an upgrade. So on back of that, you have Indigo also that is performing well in trade today. Some other names like ICICI Bank, HDFC Bank, all of them have seen good up move in trade today. But with this, we come to the end of the trade for today, and we are ending in the negative territory but positive for the Nifty Bank. And thank you so much for watching from Manisha and myself, as well as thank you Kunal, Sudeep, as well as Varun for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.